Turn me up. Turn me up. Heavy metal. No, this is music for my wedding. We also played You Look Wonderful Tonight, like everybody else. Anyways, Guten Morgen. Welcome to Forex.Today, the YouTube community of about 20,000 foreign exchange traders stationed around the world. Today, we will conduct technical and fundamental analysis, and we'll do so real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this New York trading session. That one doesn't even work. Tulio 3. Oh, yeah, Tulio 3 works. All right, cool. Hey, let me remind you that trading's risky. It's not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hang on, let me remove the old microphone. Yes, I am sure. Ba-ding. All right, I guess that's better. Now I got this old one here too. How do I get rid of that sucker? Hide it, remove it from all of your scenes. All right, I guess I'm still here. All right, that's good. All right, I might have fixed that one. All right, let me move over here. Yeah, hey. Let me, hang on. I got to move a few things from the setup. Remove that. No. Let's keep that. Let's remove this. Remove. And let's remove this. Remove. All right, I think I'm still here. Hey there, boo-boo. All right, sorry, just had to clean some things up for some reason. There must have been a Windows update because all of a sudden all my settings were different and such. And microphones worked, didn't work. Now they work again. Anyway, so hey, my name is Wayne. I'm a currency trader. I like what I do. It's intriguing. I was up late last night. I was up early this morning, and I watch all day. So, hey, pretty interesting, right? So, yeah, we do some technical analysis. We do some fundamental analysis. I am a global macro trend trader. That's my stink. But yeah, I like scalping. I like day trading as well, right? I like all of that. I like intraday trading. I like market open stuff. I trade the Asian Open. I don't trade the London Open because I'm trying to sleep. And then I do trade the sort of the pre-US Open, the US Open, the London Close. All these things are really good. I like them, and I've been doing this for about 20 years. It's pretty cool. And I'm constantly doing research, trying to figure out the why behind what we do. Why is it moving? Where is it going? Why is it going there? And how can I predict that in the future? How can I learn from the past? So on and so forth. So thank you for being on this journey with me. If you want to learn some of the mistakes and some of the things I figured out over the years, people asked me, I don't know, almost 20 years ago, hey, Wayne, can you put together a training course? I'm like, sure. That costs $88 a year. To learn everything I've learned over 20 years, costs you $88. Link is in the description below. Also, you're probably wondering, hey, I need a broker. Do you recommend anybody? Yeah, I do. Tradersway.com. Yeah, in the Swiss National Bank to peg from the euro, other brokers went out of business. Okay, big ones too. Why? I don't know. Maybe they didn't enter their clients' trades into the interbanking system and instead got caught holding the bag. Huh. Well, that doesn't sound cool. Well, with Trader's Way, I'll never forget that day. I literally was worried that we're going back into another global financial crisis. And I contacted Trader's Way, and I'm like, how are you guys doing? Are you guys all right? Is everything okay? And they're like, yeah. I'm like, really? Like, big brokers just went out of business. And they're like, yeah, well, we're not holding any client trades. That's so good. Like, I'm like, wait, you actually entered the trades in the interbanking system? Oh my God, that's so awesome. So anyways, in that instant, their let's say their ethics and their professionalism and just their standard business model of like choosing not to trade against their clients. You know, you'd expect that to be like a basic common human dignity, right? But it's an actually a quite unusual business model, and I like that business model, one that is symbiotic and relies on the success of their clients instead of the failure of their clients. So anyways, I'm like, that's really cool, man. So that was what, 8 years ago now? They earned my loyalty and respect heavy that day. So if you like a model like that, if you like people like that, and you want to partner with them, remember, they're simply an execution partner to your Forex trading business. So is that the type of service provider you want associated with your firm? Well, I said yes. So tradersway.com. Here he is, and here we shall be. Let's start with the poll. And the poll says, what are you trading today? Let's take a look at what's on your mind. By the way, is the microphone better? A few people gave some feedback yesterday saying that the sound wasn't good. Is it better now? I made a small adjustment. Well, you answer that. Let's take a look. Do I have that beautiful radio voice, Arve? Hey, welcome to WKRP in Cincinnati. Yeah, awesome. All right, so 38% euro, 38% pound, 15% kitty CAD, 7% Aussie. Interesting. So, euro is super weak, pound is sideways, and you guys are split. So, I wonder what's going on there. Are you guys just trading the same things every day? You're like, you always just trade some pound dollars, some euro dollar, and a couple other things. Like, are you just going to the same currencies every day, regardless of what's going on? That's what that kind of smells like to me. And I'd caution you if that's how you trade. Okay. CAD, yeah, okay. But with oil kicking off the target, it seems like you would be more interested in CAD now. Okay, so that's interesting to me. I think there's some odd choices in there. But nonetheless, let's go take a look. Let's start with commodities, and let's just start there. Okay, does anybody remember why we said somewhere between 95 and 98 oil would fall? Okay, and imagine that being important. Like, you might say, well, Wayne, I don't even trade this, so why would I care? Well, that would show CAD weakness. So why was it that we said somewhere around 95 to 98 oil would come down? Does anyone remember? Because remember, we're always trying to figure out why and when, and then, of course, the consequence of that. Pete says, you're showing your age with that one. Well, Pete, to be fair to me, I grew up in Canada in the 80s, and I grew up poor, so I didn't have fancy cable TV where you had like U.S. television. So I just had my local TV stations. We had 2 English channels and 1 French channel. That was my TV. And being Canada in the 80s, you watch TV shows from the 70s. So, yeah, so that was what was on TV. And it's really funny because I never watched TV as a child. Really, there wasn't anything to watch. So it's funny when you when you meet an American, they're like they have their top 25 favorite TV shows from the 80s, right? Like a Brady Bunch and the Partridge Family, and like they go through all these, Bonanza, and I'm like, hey, man, I never watched any of that. I was outside riding my bike, skateboarding. But anyways. Okay, nobody. No. Well, okay, Jim answers, right? Well, yeah, and Jim, he says Dr. Fever passed. That's why it was on my mind. But Jim answered the question deeper than I thought I'd get an answer on, right? Too high would cause, okay, yeah. But why 95 to 98? Okay, you see this analysis? I'm going to erase all of this. Okay, but I want to point out maybe why. Okay, and you can see we're getting closer and closer and closer and closer. Okay, that's the top. I think also if I can change this. Yeah, anyways. You can see like, yeah, it's just, yeah, it's enough. We got to be careful, right? We got to be careful as we go higher and higher and higher. 95.50 we hit and it dropped like a ton of bricks. You should be wary of such things anyways. And that might show things like a translation into kitty CAD weakness. That's all. And yet, almost 15% of you guys are interested in CAD. But as we approach that line, guys, more and more should be interested in CAD. Now, you should be interested in CAD if you believe this is going up or if it's rounding out and all that kind of stuff. So I just want to point that out. Like, make sure you're not just randomly trading things. Like every day, you just trade the pound dollar. I like pound dollar. I trade pound dollar. That's it. But right now, pound dollar, for example, might be one of the least interesting trades that there is. For example, you might be bullish on the pound, but the dollar's strong, so therefore that'd be a pretty dumb trade. Trading 2 things that are probably, maybe they're not in the moment, but if you think about it, if they are probably both going to be strong because they both have some sort of bullish trend built into these prices, then you should not be trading them. Okay. Okay. So here's the thing. You use technical analysis to confirm the trend is resuming or ending. Okay. So we've had the down. What are the two choices? What are the two possibilities here? Up, okay, or down. So you start with the most interesting one is that's what should happen using technical analysis only, not fundamental, not seasonal, not macro, just technical, right? Now notice here that the 55 is in control. So maybe we revise this slightly. We say, oops, yeah, we're down. And then up. Let me know if you agree with that. Type in the word yes or no. That's just technical analysis. That's what would probably happen using this type of analysis. Okay? Pete says no, which is perfectly fine. I'm looking for yes, but Pete says no. Remember, this is technical. Yeah, now, Pete, right, make sure you answer the question, Pete. Again, I must remind you, when you go back to college when you're 40, you see how dumb you were when you were 20, and you're reminded very quickly, most people don't answer the question in college. They're like, technically speaking, this is up. No, because of Greek debt or something. Like, dude, I said technically, just answer the question. Oh, well, technically, yes. But, if you talk to my mother's uncle, he says down, right? So anyways, yeah. Answer the question, right? Yeah. So technically, yeah. Now, interesting. Let me ask then, for those that said technically yes, but no for some other reason. By the way, I like Jim's answer. Yes, he believes blue, but not pink. Well, yeah, blue already happened. Okay, give me some reasons then, not technically, why this would not do that. Okay, I'll let you go fundamental or whatever, not technical. Give me a not technical reason why this pattern would fail. It's kind of interesting. Okay, Pete says geopolitics changed today. So you're saying we're not going to have the Russians invade the Ukraine? She says seasonal. Okay. Yeah. Risk off, low demand. Well, actually, demand is fairly high right now. Milos is backwardation and stuff. Okay. Yeah. Okay. Going back. Oh, right. So the Russian thing's over? I missed that. I was worried about. But that's over? Really? What happened? I'll have to Google that. See, I don't listen to the news, so every once in a while I'll miss something. Wow. Cool. The Russians backed off? Really? I guess, really? Huh? Well, oil be. So, looks like Biden pulled the NATO plan is probably what it is, right? Yeah, cool. Interesting. Yeah, cool. Great. Well, So I guess what you're saying then, let me think about this. You're saying oil prices are high because the crisis along the Ukrainian border is a threat to supply, and therefore that's the main reason this has gone up. Okay, I can go along with that. I might not believe that as much. Maybe some of that is in there. Okay, but that's interesting. Okay, cool. Now, remember, regardless of what we think, we must confirm or deny that hypothesis. I want you to use scientific methodology. Okay? So there's two things you would mark up here. Old resistance and old resistance, but then, of course, the old resistance, okay? That's the cool thing about price action that I'm teaching you guys. This old resistance, which obviously was important, became support. This old resistance became support. So at what point could you confirm the idea that you believe the removal of the geopolitical risk would normalize, let's say, a fundamentally overpriced barrel of oil? What would you need to see technically? And it would probably look something like this. Either we'll call that, right, a lower high, or, okay, the, right, lower low, or the lower high, okay? At some point, you would want to be on the clue train that things have technically and fundamentally changed. Now, back in the day, back before I had this gorgeous silver executive hair, back when I was a young Forex trader, I would simplify it and just say, Wayne, when you notice 2155 crossover, the market is now technically bearish. I wouldn't even have to think about it. And of course, to get that, you need the same price action that I'm outlining. So imagine way back here somewhere, you notice the 21 cross above the 55, and all you did was buy dips. Would you have been successful as a currency trader? Well, maybe. Maybe you'd have a better chance, right? But that's what that represents. Remember, if you've read my book, if you've done the many courses at FX Bootcamp that cover this, right? That tells you the speed and the direction of the market. Nothing more, nothing less. So this tells me here, okay, this is here. What this tells me is we're 100% bullish and slowing down. So I should be more cautiously bullish. It's sort of like, you know, the fourth wave and fifth wave in Elliott waves. You're still going up, but you're expecting less from each move. And at some point, you think this is going to correct. Okay? Now, if you look back here, we're kicking off the 21. We are here bullish, and it's fast. Otherwise, we're known as being aggressive. Okay? Neat, right? So you want to confirm and deny everything using your price action. It's good to have that bias. It's good to have the fundamentals. But where I see mistakes is that I do a speech last week about backwardation, which some of you may have only heard for the first time. You're like, wow, backwardation. And I talk about supply or game theory and all this kind of stuff. I talk about seasonality. And I say, typically starting around now, between, let's say, January and June, okay, inventories build up, and then at June, they come back down. So typically, you might see from here, prices do the opposite. Okay, as inventories go up, prices fall. Okay, and then as inventories come down, prices rise. So I do this big speech where, hey, this time of year, oil prices come down, and the mistake is you sell, right? You sell. And I'm like, whoa. You can't sell this. Literally, it says in my book, under this circumstance, you cannot sell it. Can you give your courses for free? Sure. See if you can find the link in the description below that says free Forex training course. If you can find it, you can have it for free. Yeah. Cool. Okay. But the other thing you could do is you could pay $88 for a year. Like, that's nearly free. Okay, nearly free. All right. So, anyways, make sure you're following some form of technical analysis, and whether you use price action, which I've set up here with the gray boxes, or you use moving averages, they end up being somewhat the same. Okay? And if you're looking for oil prices coming down because of something like backwardation, then you have to wait until you can technically confirm that. Another way of saying it is you cannot sell this until the 21 crosses below the 55. Cool. So now you sit and wait, and you're loving it. You're like, cool, man. This is awesome. I'm so happy Bitcoin's going up. I'm so happy. I have some Bitcoin. Yeah, it is nothing. It's one trade. No, it's not one trade. But the issue is, I want everybody to know I'm not charging $1,000 because that's not my business model. I want everybody here to learn absolutely everything I've learned over 20 years. If you don't have $88, I can't help you. Really, you're going to have to get a job. And you're like, but Wayne, I live in a third world country and all that kind of stuff. Look, I can't get you a passport. I mean, look, I can't solve that problem. But for most adults, $88 is very, very, very affordable. So I'm kind of trying to entice you to take the bait. And then you're going to go, holy crap, this is amazing. This is ridiculous for $88. And then you'll notice at the bottom of the thing, it says you can upgrade your account to join my live trading groups. And that's not very expensive either. And then now I can work with you in these free webinars every day. But I can work with you on a weekly basis. I can work with you on a daily basis and all that kind of stuff. And it's sort of like I'm sucking you in because it's not a lot of risk monetarily. So you're like, I kind of like this guy's free webinars. Let's see what this jerk is offering for his training courses. And then you find out you get a lot of value, and then I earn your respect or your trust or something. And then you're like, I'm going to check out his live groups, and now I can really help you. Or you can just stay here and this is free. I've been doing this for 15, 20 years. So, yeah, I'm not doing it for the money, but if you don't have any money, I can't help that either. Yeah. Peter's like, yeah, a college student and all that kind of stuff. Yeah. Cool. Yeah. So that's all. So, yeah. Yeah. Anyways, cool. Cool. That's going up. I'm benefiting from that, so that's really cool. Here's something we talked about yesterday. I talked about the probability of down. Oh, my gourd. Oh, my gourd. Holy smokes, did that come down, huh? Okay, just crazy, right? Watch yesterday's video. Okay, anyways, let me go back out, and you'll just see if I guess that's backed out all the way. I have to back out daily and then zoom in a bit. We're just at a very top-ish price, very high price. Statistically speaking, this is a very high price, elevated. Okay, we're more than one standard deviation, almost 2 standard deviations above the mean going back an entire year. Matt says, I know you don't want to go political, but can you comment on what recently happened in Canada? I don't know what recently happened in Canada. It snowed? The trucker thing? Okay, think about it. You can't move things around in trucks. And the car factory shut down for a while. All right, well, there's the effect. Okay? Yeah, I mean, whatever. Yeah. What the bigger question, you got to think bigger than that. Okay? Can Alberta sell oil? Yeah, I hope so. Can Saskatchewan sell wheat? Yeah, I hope so. Okay. Can British Columbia sell real estate to the Chinese? Yeah, I hope so. So really the major impact is from the truckers is 8,000 trucks cannot cross a bridge into America every day. So you have to figure out who's affected by that. And is that a long-term problem or a short-term problem? Probably short-term. So that's all right. But I'm much more interested in what China is doing fiscally and monetarily to stabilize their weak economy. Okay, but again, Matt, I don't watch the news, so I know it's on the news. I see it from time to time behind me, but all those TV news, right? So I get news from all over the world constantly, but they're all muted. So I don't listen, and I don't get excited, and I generally don't even care. So the one thing I care about is what central banks tell me and other sort of government agencies. So I'll look at things like trade balance came out recently. I'll look at trade balance. I'll look at what kind of inflation we have, not just the headline number. I look at reports. I look at the relationship between volatility and balance sheet reduction. Okay, I was just reading a report on this. If you go back to 2014 to 2017, the Fed was doing balance sheet reduction. And I was looking at the gold market. I was looking at the stock market. I was looking at dollar during that period, during the last PSR, right? So, but the trucker stuff on TV, I don't know. Right? I don't pay attention. It's just, yeah. So I stay away from that. I found many years ago two things. The media tends to grab onto a story and hype it up. And then when something happens, I never saw the response you would expect under that much hype in the market. So very quickly I learned there's probably some hyperbole going on where, yes, it's important. I understand civil liberties and that issue. I understand that 8,000 trucks can't get across. I understand that this can impact the Canadian economy, but probably not on a global scale and probably not for long term. And that it's maybe just plausibly overhyped. I don't know, but very often it is. The other thing I learned over the years is, like what I used to do is sit and I'd listen to experts on TV, right? Like professional traders. And everyone would tell me their opinion, and then I would start kind of trading that way. And very often, if not always, it always never worked. And I just like, what? But everybody said this, and then that thing didn't happen. And I don't know if they were wrong or they were lying or there was a timing issue or this, that, or the other thing. And then I would have to add to a third point. There was definitely, over the course of about 2 or 3 weeks, actually over the course of a year, I noticed newspapers, for example, didn't write things the way I would expected, because I was paying attention to the news, like the reports, and then I would look at what was being reported in the newspapers, and I'm like, really? That's weird. That's a different interpretation I had. But then there was a period of I was getting frustrated because I had Investor Business Daily, Financial Times, and the Wall Street Journal. And over this period, a couple of weeks, I noticed they had the exact same report. Maybe they twisted the words slightly, but I realized all three newspapers at the same time basically rewrote a Reuters press release. Like they didn't do any journalism at all. And I'm like, well, why do I need three newspapers if they're all just going to do a Reuters press release? And I kind of was thinking like, man, I'm disappointed in what's going on. Okay, now let me get to the last point. I watched Ben Bernanke do a press conference. I watched the whole thing. It was 2 hours. I listened to every word. Okay? And he was absolutely, completely, starkly clear. There was no way to misinterpret what he said. It wasn't a play on words. He was totally clear. And I think it was the Wall Street Journal. I'm reading the report the next morning. I'm eating a bowl of cottage cheese and berries. And I'm reading the Wall Street Journal. And they have an article about what Ben Bernanke said the day before. And it was completely 100% wrong. It was the exact opposite of what he said. And I'm like, oh my God. They weren't even there. The reporter didn't even watch or something. But it was the exact opposite. And I'm like, well, that can't be helpful. So that was it. I canceled everything. And I never listened to the news or a reporter again. I'm just like, wow, it was actually misinformation. It was wrong. I'm like, well, I'm the professional. I need to pay attention. I need to rely on my sources. And that's the central banker's lips, for example. I don't mind if the central banker lies to me. That's fine. At least I know. But if the newspaper lies to me, then I'm screwed. Okay? So I gotta be there at the press release. Long story short, therefore, I don't have time for the hyperbole of news and maybe the misreporting or misunderstanding. I thought about it like, were they not there? Did they not understand? And I'm like, well, wait, what if it's just a journalist major, some 22-year-old that just got out of college and they're like, yeah, you're doing this boring press conference thing. And they just didn't understand, but reported and something. But wrong is wrong. And that was the end of that. Okay. So all I do is fundamental analysis. I do not listen to the news at all. Okay. Dang it. Stupid euro. What's going on here? All right. So we got some dollar weakness. But wait. Dollar strength here. Dollar strength here. Dollar strength there. What's going on with this? Up and down and around. Okay. Up and down and around. Interesting. So stable, but weak here. So, right? I guess that euro, is that what's going on? Is that how we explain this, for example? Dollar's relatively strong. Let's just take a look at this, for example. Okay. Oh, well, maybe not in the moment. It looks like, all right, okay, it's coming down. Some things are, so Northern European countries are a bit weak, maybe with oil down. Interesting. So Lucas says, how do you handle cognitive overload? The market is giving you crazy amounts of information. I don't look to the market for information. Yeah, Darko. So now Darko says, well, the media becomes a powerful force, sort of like the tail wagging the dog, right? Well, that's why you invented stop losses. Okay. You don't want to get caught in the noise. So you have to choose, what are you trading? Are you trading the news or are you trading the truth? Not that they're always divergent, but what are you trading? The report or the event? Right? Are you trading the trend or the event? And so, yeah, so I got to be careful here. So euro may have been weak because of the geopolitical tension. All of a sudden, euro is getting strong here because that tension has gone away. Oh, okay. Okay. I did sell euro dollar, so I got to make myself clear there, and I'll show you why. Go back to this and put it on the 4 hour. And so I'm short off this 21. Now, it's a little lower. It's sort of in here somewhere because, you got to front run the 21. So, so to see it pop, okay, I get it. Like, right, on this chart, what you'll say, well, Wayne, this looks like, down, up, right? This kind of thing. But on this higher time frame, I'm also expecting this pattern. So this could be like a 3-wave correction. But what I missed is maybe that geopolitical tension leaving. Okay. Well, I'll take a cold shower after that one. Cool off and wait my turn. Because, okay, there's a relief rally going on in euro, but it doesn't change my 6-week outlook for US dollar. You see, I filter everything with my forward guidance that USD probably will be strong, generally speaking, over the next 6 weeks. So this could be short-lived. So if I take a loss on that, I take a loss and I sit back and I relax and see if this is a 3-wave correction and my Elliott wave friends are going to start selling in here. Okay? And it'll come down significantly. Then it'll come up, and then we'll have this huge 3rd wave down, breaching this level, breaching this level, breaching this level, and off we go. Cool. Then what will it do? It'll pull back, and it'll go off this level again. That's why I mark it. So way out in the future, of course I can't draw it, it'll come back up, hit that, right, which is your 4th wave, and then your 5th wave would be one more down, and you'd probably hit a monthly target, and we all take a break. Okay? Or I chase this. Okay? Once again, the dog chasing its tail, which means the tail's in the lead. No, I'd rather have a plan. Ja, ist gut, ja. Right. Yeah, you can see that, right? But, Darko, this late in the month, or the move, let's say, it's not necessarily the most important thing. Okay? But right? So I'm not treating that, for example, like a double top. It'd be more like if you were going to be shorting at the M3, you would have done it here. And now you're just uncomfortable in this situation. But it's not necessarily an entry because it's an M3. And I know the M3 is that sell pivot and all that kind of stuff. But I don't treat it that way this time of the month per se. Okay? It's more of just, I would look at it this way. Okay? And there needs to be a breakout if that happens. Okay? But yeah, you're right. Good call. La 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 la. Yeah. Do I think 7 rate hikes priced in? Well, if not 7, 5. Okay. So almost 40% of you guys responded that you were interested in the Great British Pound. And it's okay. It's okay. If you are if you are interested in Great British Pound, okay, you cannot trade yen or dollar, for example. Because this time of year, these are somewhat, like yen can be weak, but the thing is, okay, if dollar is weak today, yeah, then you trade yen. Okay? But most likely what you're trading is something different, more like euro pound. Okay. You wouldn't trade pound Swissy, but maybe it's pound odd or something, or pound CAD or something. But you got to be very careful with cross rates because you're trading things usually indirectly. Now, euro pound would probably be a direct flow, money moving from Frankfurt to London or something. But most cross rates are indirect trades. So not a lot of money flows from like Great Britain to Canada, let's say, relatively on the scope of the entire global trade. But pound is moving and CAD is moving, and because of that general move, so you almost like trading like a pound CAD. I'd almost think of it like this: you're trading two indices, a pound indice versus the CAD indice. But you're not really trading the pound versus CAD directly. It's not a direct money flow. So the trend can quickly, if not instantly, change because something inside the indice has radically changed. So to me, it's usually a shorter term play. Now, you might have a central bank divergence that could lend to a better trade. So like, for example, Australia is not going to raise interest rates this year. The Great Britain has and will again. So like you could be long pound and short Aussie and then pair them up on a longer term trend, and I'm okay. So that goes back or falls back to a global macro type trade. But very often what people do is they just look at shorter term strength and weakness, throw them together and trade them. But of course, then the best you could really hope for in a trade like that is a day trade or an intraday trade. Okay. But now you're looking at relative strength at such a small time frame. You might say, well, over the last 3 hours, pound has been strong and euro has been weak, or let's say Aussie has been weak. But boy, that can flip. So I'd want you to have a little more data before you go into the crosses. Take a look at this one. Okay, 4 hour. Okay. Let's do a different color. Okay. So that's what I'm eyeballing here. And the other one I'd be eyeballing up here. Okay. That's where bears would sell. Hua? What would a bull do? Okay. Okay, well, dollar weakness, guys, remember, is risk on. See you later, Pete. Okay, do you see any other setups than that? Well, at some point, a bull is going to expect a higher low. Don't you think? And then yet again, a higher low. Okay. So bulls are expecting this. Bears are a little different. Okay. They're looking, okay, it's a move like that. Okay. or they look for a reversal up here. But this in here is they want to avoid. Okay. You'll notice that this is really consolidation, that we had a wonderful trend over here. Okay. Then we lose angle and separation. And then we get braiding. Okay. And the braiding is lack of direction. Okay. I'm kind of playing it like this, where you have this down move and a resumption of trend is the general idea. Okay, so from here, you got your little corrective move. And then on this angle, you have a resumption of trend. Okay. Again, using the technique I teach you in my book, this is the moment in time you recognize that the market is technically bearish and that you're looking to sell the next 5-8 cross down, which is right there. So this is the heads up. Heads up. This is the sell. That's what it says in the book. Cool. Now, under those rules of engagement, as long as price is below the 21, you are bearish and you are aggressive. You can't even think about buying. You're a hardcore seller, and you want to sell it off that 21. Cool. Okay. Now, again, going back to the 5-8 methodology, okay, you sold here. This is a take profit. This is a new sell. This is a new take profit. And now, what does this mean? We breached the 21. Here, you are still a bear. Okay, so you sell, but you're cautious. In fact, you're expecting really a double bottom. In this case, you get even worse than a double bottom, a higher low. Okay, you're taken out of the trade, and you go cold. You go neutral. Okay, and now we're stuck in braiding. Okay, on a smaller time frame. But you may also be in a situation where this is the general plan. All that other stuff is tactics. So you're going to somehow use technical analysis to maybe try to get back in. This 2155 cross could be it. And I am playing that 2155 cross. But I'll tell you, because of the lack of direction right now, it may develop into something. But when you're kind of crossing inside the old zone, it's just telling you there is no market. Okay, so the big pink arrows are a higher time frame, like a daily chart or maybe even a weekly chart. And that's why when you have a longer term bias, you can go through quite some period of retracement or consolidation. But I think it's those areas where you probably lose most of your money. When you go through a bad period, it's typically a period where this is what's actually happening. Okay, I think you probably make money here and then give it back here. Okay. 10% PPI. Almost double digits, huh? Yeah. Well, I'll tell you what, I'm going to leave you guys here. If you're in my day trading group, I'll see you tonight at 7 p.m. Also, day traders will trade with Ryan at 2 o'clock in the morning for the pre-European Open. And for everybody else, I will see you in the morning. Peace on earth. May the pips be with you. May your profits be above average. I will see you tomorrow. Thank you for being here, and thank you for being a subscriber. And yes, Darko says, hey, a hot PPI, that would probably impact the next CPI. Yes. And that's what PPI is, right? It's the leading indicator for CPI. Cheers. Ciao.